Hi, everyone. Welcome to Hot Topics on the Edge of Show. I'm Josh Krieger here with my co host, January Jones, and today we have James Woe from DFG joining us. DFG joined us in DC as a sponsor of the Future of Money, Governance, and the Law. As actually, I guess it was last month. Time flies. It's great to have you part of DC. It's great to have you on the show, James.
Thank you, George. Thank you, Jen. Hello, everyone. This is James, founder and CEO of DFG. I'm extremely happy to join the show.
Yeah, that was a great event, and we will soon be sharing those talks and things that happened, some of our interviews in a series of special episodes. So keep an eye out for that because it definitely was on the edge of what's happening with government and money. It was a really great event. So coming up today, we'll get into progress on the crypto market structure bills, and then we'll talk about crypto for your mortgage. We'll wrap with James giving us some insight into DFG.
This is another production of The Edge Of Company, a rapidly growing media ecosystem empowering the pioneers of Web3, technology, culture, and innovation.
Kicking off with some of the biggest news this week, now that the government seems to be back in action, the Senate Agriculture Committee has just released its draft of the crypto market structure bill. This version would give the Commodity Futures Trading Commission, or CFTC, expanded authority to regulate digital commodities. But it's a bit more complicated than that because there's also a bill with the Senate Banking Committee, and those two, alongside the House Passed Clarity Act, will all have to be reconciled and put into a final version before being signed into law by President Trump. So, enough of my schoolhouse rock explanation of how a bill becomes a law, but it is complicated and it is in this context of the government shutdown. So, with that ending, but these processes and negotiations that really need to happen to reconcile all this, what do you guys think? Is this going to be a priority as something to get through? Or maybe it should go slower? I mean, does this need to move fast? Because this is very complicated. And they're talking about changing levels of oversight across the board in so many different regulatory agencies.
Well,
Josh, what are your thoughts?
I think it's important to appreciate that this is still just a discussion draft. Key issues like conflict of interest rules for vertically integrated platforms and even the fundamental makeup of CFTC itself are still to be determined. It is a meaningful move that the Senate wants CFTC in the driver's seat. I think this was sort of predicted by a joint session between the SEC and the CFTC also about a month ago with some of the key leaders in the space. But there's an underlying political tension here in terms of the partisan balance of CFTC. And there's been some whispers about connected firms to the administration, even a meme coin project that makes this draft less of a finish line move and more of a starting gun. What are your thoughts, James?
Yeah, I think I agree with you. It will probably pass, but it will take some time for this to go through. And the regulation cannot be done like overnight, right? So it's not like as quick as like the industry, the move of the industry. So I think for people like me as an investor in the crypto industry, what we are looking for is really the regulation clarity for a lot of things, right? So, cause previously in Biden administrations, they can be, I think it's somehow they can be too flexible about define what is security, what is commodity. That would leave a big kind of like a area for the regulation ambiguity and for like what you can do, what you cannot do. So what we want is really the clarity for this project to know that what things they can do, what things they cannot do. Then as an investors, then we will know like okay, we will tell the project we invest basically, hey, this is the line you cannot touch. This is something you should do. And now I think it seems like we are on the right track to actually understand better about the policy, what is the line there, and what things really is going to be kind of like affordable, and what things is actually you cannot do. So this is actually very good for the crypto industry overall, as and it's very good for the project and also very good for the investor like us.
So James, just a follow-up question on that. I mean, from talking to venture capitalists in the space 6 months ago, there was a very bullish sentiment on identifying potential investments in the U.S., encouraging portfolio companies to consider moving to the U.S., as well as sort of accelerating projects in the U.S. Is that sort of on pause right now while this regulatory clarity remains unclear?
Yeah, I think it's actually I think a lot of for what I see in the industry, I see a lot of project actually are trying to move you to US. Actually, or like at least probably open an office here or hire the people here or hire the people there. I think it's definitely, I mean, as long as as I said before, regulation need to take time. So it's not like on the second day they can give you answer about what you can do, what you cannot do. But as long as everything, the policy is consistent and everything is on the right track, and it's very low risk for the actually the project or the company to do the right thing, but being sued by SEC. I mean, that's ridiculous, right? So this is at least as long as we can prevent that from happening, I think more project and more legit business are willing to actually uh move to US, or at least probably open a branch in the US. So that is what we see in the market. I think for this administrations we have very, very good kind of crypto policy, and Trump say it's going to make the capital of US the capital of crypto. I think it is happening right now.
Well, there is a lot of progress. I mean, I think that the sticking points are anything when you go to Congress, and it should be like this. You have to get everybody to agree in what's the most important thing to do in what order, and who's going to be overseeing this, right? And so that takes a little longer, but maybe we need to have that discussion a little bit for like a few months at least, because it is a major overhaul. And the Trump administration has already put out their roadmap with the White House crypto report, right? And the executive agencies and directives are already coming from that through these agencies. So it's kind of like it's all happening at once, And for me, it's just I really want to see that dialogue, because there are very important questions when you're redoing the entire financial structure of a country as big as this. And, maybe everyone should just be happy that we got stable coins. I don't know. That seems like a big win for 2025, in light of all the other things as well.
Certainly. Yeah, James, what you're closely attuned to this region. What are your thoughts?
Yeah, I agree. Actually, we are very lucky about we investing to Circle back to 2018. I think the stable coin is actually cause initially what we started is like a, I mean it's a little bit like a tricky, right? Cause initially the government is actually not very supportive to crypto. So instead of using fiat channel directly, so there's basically no fiat channel directly. You can now, at least in a lot of countries, you cannot deposit US dollar to buy Bitcoin, right? So that's the issue. So that's why USDT and the USDC become very, very important, because they serve as a like a kind of like a way for people to hold. And for example, if you want to you think the crypto market is going to turn from a bull market into a bear market, right? Then you probably want to sell Bitcoin for US dollar, but there's no channel for you to do that. So instead, I mean, USDT and the USDC can now serve as a very important kind of ways for kind of the fiat channel for people to on ramp and off ramp fiat, right? So if you think it's a bear market, then you sell your Bitcoin to USDT, but then you probably don't want to cover your USDT back to US dollar, because maybe the market goes down low, you want to buy immediately, then it takes time for you to actually do on ramp off ramp. So that's also a reason why USDT and USDC become very, very big. But I mean, still, I mean, I would say before this administration, stable coins is always in the gray area, because basically no one give you regulated clarity whether this is legit or not, right? But it seems like in this administration, again, this is very, very positive and important to actually to protect the rights of existence of the stablecoin, right? Especially you are legit ones, you do like a 1-to-1 backed stablecoin. Why this is a good business? Why you don't allow this to exist and it actually help crypto people to do on ramp and off ramp. So this is actually very I think positive to the crypto industry overall. I would be a little bit kind of skeptical about Ergo stablecoin because I don't think a lot of Ergo stablecoin are actually stable. So either their project can be hacked and the mechanism have problems. So I would be slightly cautious on that part. But for like a USDT, USDC, these kind of audited 1-to-1 back like a stable coin, I'm really happy to see, they get like a regulatory clarity, and I'm very happy to see Circle getting listed. Although the stock performance is not very good right now, but see eventually we are still very bullish on the company.
Well, now let's talk about housing in the US. Other policies have been coming up from the Trump administration, and we're talking about crypto for mortgages. So we here in crypto, we know a lot of people are digital nomads and they're going to different places around the world that are favorable. But what if you want to buy a house in the US, just like mom and dad? So the Trump administration has announced regulations that they would like to see put in place that would have you consider crypto assets as collateral for home mortgages, similar to how stocks and other investments are already considered. In addition to that, this week, the idea of a 50-year mortgage was also announced. So it's an interesting pairing. So you could get crypto plus a 50-year mortgage. Definitely new ideas in the housing space to address these housing costs that can be kind of unattainable. But is crypto a really good fit for this, especially if you're considering a mortgage over 50 years? James, Josh, what are your thoughts on this? Because I think it's going both ways for public sentiment.
Well, I mean, the potential with fractionalized real estate and tokenization of real estate has sort of expanded exponentially with the new sort of policy environment. So early adopters like Proppy have a lot more tools in their toolkit now, and they talked about this actually at our event most recently in terms of the ability to use AI real estate agents, the ability to help people get access to housing through different types of products that weren't available before. There's a real problem happening in the U.S. market and globally with affordability of housing, and I think it's sort of a fundamental concept of people having the right to own land, and the ability to give people new opportunities to do that, I think is really cool. Now, on the execution side, I think you bring up a really good point, January, in terms of what products are the right fit, and are they sort of tenable over the long term. There's also this sort of refi movement going on in our space where people are refinancing mortgages with crypto. And we've seen in the past sort of crash. I remember the horror stories of people that took out loans on their homes to buy crypto and then experienced a massive crash, and it was pretty devastating. So I don't know exactly what the right balance is in terms of these products and services, but I do think they're valuable and they need to be developed properly and heavily scrutinized by consumers that are making these decisions to make sure that it's the right ones for them in terms of both the product and the terms and the reliability of the companies behind them. What are your thoughts, Jane?
But you're throwing in to that mix tokenization of real estate, which didn't enter into kind of the conversation at the federal level. But you're right. That's kind of a trifecta there, right? Longer mortgages, crypto-backed mortgages, and then also if you're tokenizing, so maybe you don't own the whole house.
Yeah. So I think the fractionalization of real estate is definitely a pathway to access. We've also talked recently on the show and our conference about tokenizing private equity. It's all along the same lines of giving more folks access to products and services that are going to increase potential for wealth. With that comes sort of ensuring that the collateralization component is managed properly. James, what are your thoughts?
Yeah, I think crypto right now is I guess very big right now and very popular. So based on like a crypto backed mortgage, I think that make perfect sense to me. If you use things as a collateral, you want the collateral to be kind of very liquid and big enough, right, for you to liquid, and you don't want any kind of and you want to you can kind of like a cash out anytime. So Bitcoin is actually much better than stock on that perspective, right? So just imagine, I mean, today the one I just roughly checked today, the trading volume for Bitcoin's $76 billion right now today. It's much bigger than Tesla. It's much bigger than Nvidia on the trading volume side. And the stock market will close on the weekend and only trade for a certain time period, right? So crypto is 24 multiple 7. So on that perspective, Bitcoin is actually a much better asset to use as collateral than any kind of stocks. So this is actually make a lot of sense for this administration to allow the crypto backed actually mortgages. I think that make perfect sense. But to be honest, I mean, not all crypto are fitting to that role. As not as the same as not all the equity are fitting to that role, right? So there's all kind of like bad companies get still on Nasdaq with no liquidities, and also the same thing apply to crypto. There's small tokens with no liquidity. The founders direct the project, whatever. There's always like a bad stock and bad tokens. But I think including crypto into part of the collateral asset, that for me that on that perspective that make a lot of sense.
Right on. Appreciate your perspective, James. And now let's shed some light on what's going on with DFG. Appreciate you guys being part of our event. And you guys have been formidable players in the blockchain space for quite some time and have been sort of pioneers at identifying potential attractive layer ones and other sort of key infrastructure for the space. Now you have a Bitcoin reserve. Tell us a little bit more about that and what your plans are for the future there.
Yeah, sure. Thank you for kind of highlight this. I just mentioned this on Twitter like a while ago, right? So to be honest, my thoughts is like basically all the company in this world should have a Bitcoin reserve, right? No matter you are like a big listed companies on Nasdaq or you're a small firm, because Bitcoin is actually a asset you can basically hedge all the risk, and it is a very kind of good asset for you to hold and have great potentials. So you should have Bitcoin at least probably on your balance sheet, right? So this is actually just imagine what's going to be on your balance sheet, right? So you're gonna have cash. Then you can have the cash to pay your employees, to pay all kind of fees, but you may probably put part of your money into T-bills. In that way you are not getting diluted because the real inflation every year is 10%. So if you only holding cash, that will be diluted. So you want to probably putting part of your money into T-bills. You are not to use it in the short term, but this is a safe way to do that. But you really don't want actually all of your monies, whatever you raise from the outside investors or the cash, getting diluted, right? Because the inflation is very high. So on that perspective, it makes perfect sense for any kind of company to holding a certain amount of Bitcoin as a Bitcoin reserve on their balance sheet. So this for me is actually not only because DFG is a crypto investment firm, then we should do it. Basically, all the companies should do it. But because we are extremely bullish on the crypto space. We've been here for more than a decade. So for sure, I mean, the Bitcoin reserve will be a very important part of our kind of company in the future. And because we are not listed company on Nasdaq, we don't have to disclose how much Bitcoin we own. But I would say here this is going to be a decent amount of the percentage of the AUM DFG is managing right now.
So James, just zooming out a little bit, you guys are sort of always thinking ahead. I'm curious what your current thesis is on the industry and what are the types of projects that you're excited about?
Yeah, sure. Thanks for the question. I believe, a lot of people right now actually are not very bullish on the market because we see like VC now investing into that many projects and a lot of projects actually running out of fund. But I think that's in long term, that's pretty healthy. To be honest, I don't think the market need that many projects. We now even have more tokens listed on the exchange than the stock listed on Nasdaq. So that's a little bit too much for us. And to be honest, 90%, 95% of project in the market doesn't make a lot of sense to me, right? So they may have idea, they just rush. For me, in my perspective, they just rush to launch a token, and they want to get set on a exchange. And because I mean, 2020 and 2021 is a big bull market, everyone want to randomly invest into all kind of like tokens, right? So that makes the market a little bit too much. So right now, what we see in the market is actually a lot of bad project. A lot of project, didn't kind of like focus on the on the product or on generating revenue. Actually, they are died. So which is I think in long term is healthy for the for the market. So only the good ones, only the ones where real product people are using it, or only the ones with real revenue number or making money, then will be exist for the long term. So that's overall the situation of the market. And for us, we basically do two type of investment. The first is that we did in Circle, just as what we did in Circle before. So we are going to do a lot of like a pre-IPO investment. I believe this is going to be more like investing into infrastructure, which like a financial service to the crypto industry. I think this is important because we will see. I mean, although they are still like a centralized service, but at this stage, I think it may still. I mean, as what people to partially use like a centralized service, partially use decentralized service. Eventually, we are going to fully decentralize, but there's a stage for these kind of project to actually exist. For example, just like Circle, people need USDC right now. You cannot like say, okay, because we want fully decentralized, it doesn't make any sense for USDT or USDT to exist. I don't think that makes sense either. So I think this type of project we are still going to invest, and I think 2026 will be a big IPO year. So we will see actually much more like a crypto project to get enlisted on Nasdaq. So this is one investment direction we will take. The second is more about like we're gonna keep investing to the crypto project in two ways. The first is we are going to buy tokens we think make good product and generate good revenues on directly on the second market. For example, we are a very big kind of DeFi believers. So we like a lot of projects like Uniswap, like RV, like Hyperliquid. So we've been very bullish on this project. These projects have great product, generate a lot of revenue, and they actually, like Uniswap just turn on their fee switch model, they're actually going to buy back the token as well. So the token is not like a pure governance token being useless. So the token itself still have value. So this is the type of project we will do. We will directly buy this token on the second market. And in the prime market, we will be very, very cautious about doing investment because we really don't see a lot of exciting idea. But if there's any later stage project with really kind of disruptive ideas, innovations, then we'll think about investment as well. But to be honest, I don't really see too much about it right now.
Appreciate your perspective and appreciate your insights on all the topics today. I guess that's a wrap, January.
Yeah, we talked about the crypto market structure bills, crypto-backed mortgages, and we got some insights from James from DFG.
I'm Josh here with January and our guest James. Stay curious, keep pushing boundaries. Don't forget to subscribe and follow on your platform of choice so you never miss what's next on the Edge Of show.